Hi, it's Don Southerton and the weekly episode of Everything Korea. Welcome back. This week's topic, Trump and Korea, Part 2. Let's go ahead and get started. Trump, a question that surfaced often while I attended the 2016 LA Auto Show Media Days. I fielded questions from both Korean and American leadership on the impact of the election. Many have been following my daily posts and recent commentary. Assessing what to share next, I see several actions by the incoming American administration. First, in contrast to the president-elect's bold statements to take on NAFTA, which I spoke about last week, I find the U.S. is less likely to pursue extreme actions such as withdrawal from or a major renegotiation of KORUS FTA. That's the treaty between the United States and Korea. That said, the U.S. is likely to strengthen policy measures that could restrict imports by imposing anti-dumping tariffs or countervailing duties. Now, this is not new. For example, after a repeated pattern of pricing below cost by Samsung and LG on clothes washers over the past few years, the Korean brands are now paying hefty anti-dumping duties to offset the margin and price advantages over manufacturers and threatening American manufacturing jobs. Now, the incoming president could direct the U.S. Department of Commerce, which oversees this, to aggressively pursue similar actions against Korean importers where local jobs could be impacted. The incoming president may also demand its trade partners to reevaluate currencies, starting with those nations we recently placed on a currency watch that includes South Korea. Now, in April, the U.S. Treasury Department announced that there was a whole list of countries that had been, that could be doing unfair practices. Now, weakening a currency can make goods produced by that country for export more attractive to the U.S. consumer. The prices are lower then. However, it leads to a trade deficit, and especially if the host company has a stronger currency, which is the case of the strong U.S. dollar. Now, in recent days, the U.S. dollar has continued to surge in values against countries around the world following the election. Again, this may be good for American consumers buying foreign goods, but make the U.S. manufacturing less competitive for export. As the South Korean won has finally begun to strengthen against the dollar following the shock election, it is starting to normalize a little bit more. Now, more an issue than the dollar to won, which is Korea to U.S. currency exchange, it would be if the U.S. targets and designates China as a currency manipulator, which it has in the past. And it could slap up to a 45% tariff on Chinese imports to America. Now, this has a ripple effect on Korea, where their economy would suffer since they have a strong export going into China. And if the Chinese economy suffers, then it would have less Chinese consumers buying Korean goods. So it could have a lot of impact on the Korean economy. So they're very concerned about this. Now, a very well-stated statement on Korean concerns over the recent Trump trade issues is my longtime friend Yoon Won-suk. Now, he currently serves as the Executive Vice President for the Korean Trade Investment Promotion Agency, which some of you know as KOTRA. His recent statements, I believe, capture the mood in Korea. He notes how major Korean exporters could potentially face increasingly unfavorable conditions in the United States. And I quote him here, "Although it is too early to say what steps the Trump administration will take at the moment, it's certain that Korea will face greater pressure to open its legal and service industries and curb its shipments to the United States." He further goes on to say, it's unlikely that Trump will nullify KORUS FTA, but instead choose to revise in favor of U.S. companies. He will certainly raise trade barriers to keep out foreign goods to revitalize America's faltering steel and other traditional industries, as he promised to marginalize blue-collar workers. So I think this is a good summary there. Oh, one more thing. On the encouraging side, earlier this year, the International Trade Commission, the ITC, showed that KORUS FTA did have a very positive effect on the American economy, improving the trade balance. The report pointed out that KORUS FTA led to a $15.7 billion improvement in the U.S. trade balance, and this is for 2015. The U.S. posted a $28.3 billion trade deficit that year, but it would have been $44 billion without the bilateral trade agreement. So there is a positive side of this agreement. Building on this and to counter the fallout of the Trump protectionist trade policies, last week the Korean government has begun to mobilize resources in an effort to sway the incoming administration that KORUS is mutually beneficial, and in particular how South Korean investment in the U.S. has stimulated jobs over the years. And I think this is a very important thing. There's a very positive relationship going on right now between Korea and that Korean companies are investing heavily in the United States. I too see this as a strong argument, and one that only has to travel Route 85 south from Georgia into Alabama. And you'll see the growth spurred by Kia Motor Manufacturing and by the Hyundai Motor Manufacturing Alabama plants. Along with this, we see a huge rise in Tier 1 and 2 providers along this corridor, and the boost to local economy is hard not to ignore. More so for people like me who have been traveling before the plants were even really established. It's just really an incredible synergy going on there that we attribute to the opening of these plants. So this is just one example. So stay tuned to my updates as this story continues to develop. I'll continue to share what I see and observe as this also unfolds. Questions or comments are always welcome. So until next time, this is Don Southerton wishing you all the best.